Mastering the art of risk management in investing is like learning to navigate the unpredictable seas of the financial world. It involves balancing potential gains with the need to protect your investments. But here's the twist. How can you find the sweet spot between taking enough risk for growth and avoiding too much risk that could lead to losses? Today, we're diving into a topic that's absolutely crucial for anyone navigating the unpredictable waters of the financial markets: mastering the art of risk management in investing. Investing without a sound risk management strategy is like sailing without a compass. You might enjoy smooth seas for a while, but sooner or later, you'll encounter a storm. So let's chart a course for financial success by unraveling the intricacies of risk management in the world of investing. Understanding risk in investing. In investing, risk is the chance that things might not go exactly as planned. It's a part of the deal, a bit like how you can't control the weather on your trip. But understanding risk is like being a smart traveler, knowing there might be challenges and having a plan to handle them. It's not just about numbers. It's about having a mindset that mixes caution with courage. Emotionally, it's like becoming an experienced explorer, ready for whatever comes your way. This way, investing turns from a regular money thing into an exciting and rewarding journey, where each risk becomes a step toward growing your money and being ready for anything. The risk-return trade-off. Investing is a game where you weigh the chances of winning against the chances of losing. It's a dance between risk and reward. Picture it as deciding how fast you want to drive. Going too slow might be safe, but you won't get very far, while speeding up can get you there quicker, but comes with more twists and turns. In investing, it's about finding the right balance between risk and reward. It's not just about numbers. It's about making choices that align with how much risk you're comfortable taking. Emotionally, it's like deciding how adventurous you want your journey to be. A slow, scenic route or a faster, more thrilling path. The risk-return trade-off is about finding the sweet spot where you can grow your money without losing too much sleep over it, turning investing into a calculated adventure with a touch of excitement and a dash of caution. Setting investment goals and risk tolerance. One size does not fit all when it comes to risk management. Just like picking the right pair of shoes, finding the right investment strategy involves understanding your unique needs and preferences. Think of it as selecting shoes for different occasions. You wouldn't wear running shoes to a formal event. Similarly, your investment goals and risk tolerance should dictate your financial choices. It's about finding the perfect fit for your financial journey. Your risk tolerance is like the comfort of your shoes. You need it to be just right to walk confidently. Whether you prefer a conservative approach or are comfortable taking on more risk for potential rewards, your investment strategy should align with your personal style. Diversification as a risk mitigation tool. Diversification is often hailed as the golden rule of risk management, and it's a bit like having a well-balanced meal to stay healthy. In the world of investments, it means not putting all your eggs in one basket. Instead of relying on a single investment, diversification involves spreading your money across different assets like stocks, bonds, and real estate. Think of it as having a variety of food groups on your plate for a balanced diet. By diversifying, you reduce the impact of a poor-performing investment on your overall portfolio. If one part isn't doing well, the others might compensate. Emotionally, it's like having a safety net, knowing that your financial health isn't dependent on the success of a single venture. Diversification adds a layer of stability to your investment journey, offering peace of mind and a smoother ride towards your financial goals. Asset allocation strategies. Think of asset allocation as crafting the perfect recipe for your investment portfolio. It's like deciding how much of each ingredient to use in your cooking. In the financial world, it means determining the right mix of different types of investments, such as stocks, bonds, and maybe a sprinkle of other assets. The traditional 60-40 portfolio, like a classic dish, is a tried-and-true favorite. But for those who enjoy a bit more flavor, there are dynamic approaches like tactical asset allocation, adjusting your mix based on market conditions. Finding the right balance is a bit like creating a dish that suits your taste buds, not too spicy, not too bland. This way you can maximize returns while keeping risk at a level that feels comfortable for you. It's a recipe for financial success that brings a sense of satisfaction and control to your investment journey. Risk management tools and instruments. Navigating the financial world requires a diverse set of tools to protect your investments. In this toolkit, you'll discover various risk management instruments. Think of them as shields for your money. Consider these tools as gears that help you navigate the market's ups and downs. From options and futures contracts to insurance-like instruments, each tool serves a unique purpose, providing a safety net for your financial journey. Emotionally, it feels empowering to know that, even in uncertain times, you have resources to shield your investments and secure your financial well-being. Continuous monitoring and portfolio rebalancing. Keeping your financial ship sailing smoothly involves continuous monitoring and portfolio rebalancing. Think of it as steering your ship through changing seas, adjusting the sails when the wind shifts to stay on course. Regularly check on your investments, ensuring they align with your risk tolerance and financial goals. If certain assets veer off track or become too dominant, rebalance your portfolio. Emotionally, this process is akin to tending to a well-kept garden. By nurturing and adjusting, you foster an environment where your investments can thrive. It's not just about numbers on a screen. It's a dynamic and personalized journey, offering a sense of control and adaptability as you navigate the ever-changing waters of the financial world. Behavioral finance and emotional discipline. Navigating the world of investing involves understanding behavioral finance and mastering emotional discipline. It's like taming a wild horse. Emotions can be powerful, but learning to rein them in is crucial for successful investing. The ups and downs of the market can evoke various feelings: excitement, fear, or even panic. Emotional discipline is the key to preventing impulsive decisions that may lead to financial setbacks. Think of it as maintaining a steady hand on the investment tiller, steering through the storms with a clear mind. This emotional discipline is not just a skill. It's a journey towards self-awareness and resilience in the face of financial fluctuations. It transforms investing from a roller coaster of emotions into a strategic and mindful endeavor, ensuring that decisions are driven by reason rather than fleeting sentiments. Emergency funds and contingency planning. Life often resembles a roller coaster, and just when you think you're cruising smoothly, unexpected twists can jolt you. It's akin to having a safety net in place, something known as an emergency fund. This fund acts as a superhero cape for your wallet, providing a shield against life's surprise attacks, be it a sudden job loss, a medical emergency, or your car deciding to retire unexpectedly. It's not about predicting the future. It's about being prepared for the unexpected. Planning for the unforeseen is akin to having a warm coat in winter. It might seem unnecessary until the chilly winds of uncertainty start blowing. It's a way of telling life, I'm ready for whatever you throw at me. And in those tough moments, having that financial buffer feels like a comforting hug, reminding you that you've got this, even when life throws its curveballs. Learning from mistakes and continuous improvement. In the world of investments, we all wear the same shoes that occasionally step on unexpected stones. Nobody is immune to making mistakes, especially when it comes to managing our money. It's like navigating through a maze where wrong turns are a part of the journey. These mistakes, though, carry a silver lining. They offer lessons. Think of them as those friendly nudges from life, encouraging us to learn and grow. It's a bit like riding a bike. You might wobble a bit before you find your balance. When we stumble in the financial realm, it's easy to feel a mix of frustration and disappointment, like missing a step on a staircase. Yet, it's crucial to remember that these missteps are not dead ends. They are opportunities for continuous improvement. Each error is a chapter in our financial story, teaching us how to be smarter, more resilient investors. It's a journey of self-discovery with a few potholes that, in the end, make the road smoother and the destination more satisfying. And that concludes the guide to mastering the intricacies of risk management in the realm of investments. I trust you found these insights beneficial and relevant to your individual investment path. If you're prepared to strengthen your financial strategy, remember to show your support by liking this video, subscribing for additional financial wisdom, and sharing it with your fellow investors. Until our next encounter, this is wishing you well in your calculated investments, effectively managed risks, and a financial journey marked by resilience and prosperity.